Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. I'll speak about the general trade setup. And Asia at this point of time is not trading with a much positive bias. The SGX Nifty is indicating a probable gap down that we have in opening, but still there's almost 1.5 hours left for us to open. But now it indicates a negative outlook for our market below the 10,650 mark in trade. Yesterday the US markets were shut, so we don't have any updates from the ADRs. But the commodities were on in trade. Crude actually seems to be falling significantly. It's down 1.5% in morning trade today. So Brent WTI is below the $67 barrel per mark, while yesterday we saw close to a 1.5% cut again on crude that came in. Most of the base metals on the LME ended with a negative bias. You had aluminium, which was down 0.8%, nickel was down 0.8%, lead was down over 2.5%, tin was down almost 1.3%. But the cues from China currently looking on the better side. Steel is trading higher, zinc is trading higher, copper is trading higher. Aluminium continues to fall in trade. It's down almost 0.4%. Most of the precious metals are trading with a slight positive bias in trade. Now FIs were net sellers in trade yesterday. For the whole month they have been net sellers. DIs have been net buyers. They bought in almost 14,000 crores this month, while FIs have been sellers to the tune of almost 9,000 crores this month. So it's a rally that's driven by domestic liquidity that's coming in. As far as the sectors are concerned, the Nifty managed to rally almost 80 points, but there was outperformance from the mid cap and small cap end of the market. Some of the sectors that managed to do well in trade were the Nifty Pharma Index led by Sun Pharma. And the PSU banking index continues to do well. They're up almost 3%. IT, because of how the rupee has been moving, was down almost 2% in trade. Most of the IT companies were down in trade. If you're looking at what happened with the VIX was up almost 3%. So VIX coming in close to the $13 level in trade. The Nifty was up 80 points. HDFC Bank, L&T, Sun Pharma and ITC were the major contributors on the positive side, while TCS, Infosys, Tech Mahindra and HCL Tech were the ones that ended on the negative side. So they were you can clearly see that IT stocks were rather weak in trade. But Agam will join me here. Agam will tell us what are the major FNOQs that you need to watch out in trade today.
Right, Darshan, we did see the Nifty advance by as much as 80% points in yesterday's day of trade, with Nifty hovering around the mark of 10,700. In terms of rollovers, as you can see, we've seen unwinding in the Nifty futures, and of course some rollovers building up in the Nifty Bank as well, up as much as 17%. Now moving in, when it comes to the India VIX, that currently stands around 13, and the Nifty put call ratio also edging up higher to around 1.56. In terms of changes in open interest, again what we've seen is a little more writing in the 10,600 call, and unwinding in rather the 10,600 mark around there. Moving in, when it comes to stocks, Rampuccini enters the ban. On the other hand, two stocks move out of the ban. So we have BEML and Just Dial moving out, and of course Pidilite continues to see more longs building in, even as we see a substantial build up in the rollovers currently standing at 21%. So a lot of stocks to keep an eye on. But now let's go across to Paul Allen from Bloomberg to give us the top international headlines.
The US is said to be willing to discuss a deal with Europe over claimed illegal state subsidies given to Airbus. The proposed talks indicate a shift in position for the Trump administration and could open the way to the EU avoiding billions of dollars in sanctions. However, we're told Washington is ready to impose penalties if the two sides fail to reach a solution. The Bank of England is denying a rift with the UK Treasury after the Financial Times said the two are at loggerheads over the prospects for the city post-Brexit. The FT cited unnamed bank officials in a report that claimed the bank's deputy governor had fallen out with the Treasury on giving away regulatory control. However, a BOE spokesman says there's no truth in the idea of a policy split. Indonesia's new central bank governor has set the stage for a second rate hike in 2 weeks at Wednesday's policy meeting in a bid to stem the rout in the rupiah. A day after being sworn in, Peri Warjio called emergency talks to support the currency. This move helped lift the rupiah, paring back its decline for the year to 2 to 3%. Warjio has promised to be ahead of the curve on monetary policy. Malaysia is scrapping the planned Kuala Lumpur-Singapore high-speed rail line to help revive the country's financial financial health. New Prime Minister Mahathir Mohamad says he's cancelling the project that was signed under the administration of his predecessor Najib Razak. Mahathir says his decision is final and accepts that Malaysia will have to pay contractual penalties for axing the deal. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Back to local equity markets. Well, Apex Frozen Foods is the stock of the day today on back of good set of numbers reported by the company. If you look at the top line growth, we're looking at a 24% uptick there to a number of around 203 crore as compared to nearly 164 crore that we've seen in the corresponding quarter. It has been a good bottom line show too. We're seeing a more than twofold, more than doubling of the EBITDA there at 12.7. It shot up to 24.9 crore in this quarter. Also, if you look at the margins, they have expanded to 12.3% as compared to nearly 7% in the corresponding quarter. What has led to good set of numbers, higher revenue along with your lower other operating expenses has led to a good show on the operational front for the company. Raw material cost as a percent to your net sales, that number has come down substantially to 68% from 75% earlier. Also, if you look at other expenses, they as a percent to your net sales also have declined to 13% from 15% earlier. This combined with the reduction in the finance cost, which has dipped as much as 45% year-on-year basis to a number of around 1.3 odd crore, has led to a good bottom line show for the company.
The number of banks which are under PCA, whether they were under PCA or not, regardless of that, I feel quite a handful of them, at least half of them, even going by the past history and the business progression and the other circumstances which are surrounding them, I clearly don't see a very convincing roadmap for them under which they can justify their existence as the independent entity capable of bouncing back and showing something, a very convincing performance. That being the case, to my mind, at least maybe half a dozen of them, probably the way things look for them, they may stagnate at the level where they are. There is an interesting fact also. Many of these banks are certainly losing their asset franchise, but most of them, sorry, their liability franchise is intact. Absolutely. It means with that liability franchise being intact, other things not happening, they can barely manage to at least survive, if not grow. So this survival means only a stagnation. So probably as a gradual, because these things cannot be done overnight, there are other related issues. So they may stagnate for a while and ultimately become a right case to lose their identity with someone else, and then continue to operate as a consolidated entity. That looks like a more likely outcome and probably a course of action which could be adopted.
The stocks in focus that would be in focus for today will include a bunch of results that came in post-market. Now, I'll start off with the strong numbers first. The Lomax Industries, the revenue was increased by around 45% to close to 560 crore rupees, while the net profit increased by around 1.2 times to close to 18 crore rupees, mainly on the back of strong operational performance The EBITDA of the company jumped by around 82%. Second is NMDC, where the revenue increased by around 35%, while net profit jumped by 1.2 times to close to 1,106 crore rupees in the fourth quarter of financial year 2018 on the back of higher realizations and lower tax expense. Third on the list is Minda Corporation, where the revenue of the company increased by around 40% to close to 721 crore rupees, while the net profit of the company jumped by around 1.4 times to close to 39 crore rupees on the back of strong operational performance and lower losses in the joint venture business. On the weaker side, Oil India, if you see, the revenue of the company increased by around 5%, but the operational performance of the company was very weak because of higher other expenses. However, the net profit of the company increased by around 23% to close to 867 11 crore rupees on the back of higher other income. Aurobindo Pharma saw its revenue increase by around 11%, while the net profit was largely flat at close to 530 crore rupees for the company. NLC India, now the revenue of the company decreased by around 10% to close to 2,500 crore rupees, while the net profit of the company declined by around 84% on the back of higher finance cost, lower other income and weak operational performance. Last on this list is REC, where the revenue of the company declined by around 4%, while the net profit declined by around 37% on the back of higher tax expense and lower other income. The last stock that would be on focus is because of a bulk deal where HDFC Mutual Fund bought in close to 15 lakh shares, that is 1.3% stake in Advanced Enzyme, that will keep the stock in focus today.
Okay, L&T came out with numbers. The top line was in line with what we anticipated, but it was a strong operational performance from L&T this time around. The profit coming in higher, the EBITDA coming in higher this time around. Now, even on the order book front, it was much higher. Close to 50,000 crores was the orders that the company got in this financial in the fourth quarter. Our estimate was close to almost 40,000 crores, so that was a big beat. So if you take the whole year into consideration, what they've done is that the revenue guidance has been missed. They had guided for 12%, then the company said that they will do 10%. They managed at 9.5%, so revenue guidance was a miss. On the order flow, when they had anticipated a flat order flow for the entire year, they came in with an order inflow growth of 7%. So that was the positive that came out. Overall, if you're looking at the sectors itself, most of the sectors that did well, included their core sectors. So infrastructure did well. There was a growth of 21%, but margins didn't grow there. You had a power segment which fell in almost 11% with weak margins that came in. Heavy engineering, as well as hydrocarbons were the sectors in which there was growth that came in. But mainly the majority of the growth and the majority of the margin expansion came in from their subsidiaries, the IT businesses and the financial businesses, which are already other listed companies. Now, as far as outlook is concerned, slight caution was coming in from the management. They said that they need to be dependent on the order inflow from the government and the PSUs to go ahead. But the guidance that they have given, similar to what they had said last time around, 10 to 15% or revenue guidance and 10 to 12% order inflow guidance, and stable margins at this level with an upward bias of 25 basis points. So it was so if you're looking at it, it was an inline to slightly strong set of numbers for L&T this time around.
Well, in key earnings that we'll keep an eye out today will be Coal India. This is a company that is expected to report good set of numbers coming in this quarter. We're looking at a good 10% revenue jump at a number around 24,720 odd crore as compared to 22,400 crore that we've seen in the corresponding quarter. While EBITDA has seen rising as much as 91% for Coal India on consolidated basis to a number of 6,460 odd crore. Margins are seen expanding year-on-year basis to 26% as compared to 15%, and net profit too is seen higher by as much as 60%. In terms of other parameters that we'll keep an eye out will be the volume growth figure. That's an important number. Raw coal offtake volumes are expected to see a growth of 5% sequentially as well as on year-on-year basis. We are expecting a flattish sort of growth coming in from FSA volumes, which is actually down by more than 1% sequentially and 3.5% year-on-year basis. E-auctions volumes are seeing a healthy growth at 22% sequentially and 9% year-on-year basis. EBITDA per ton, again a key metric that we'll keep an eye out. That's expected to rise as much as 33% sequentially. Realization per ton also is expected to move as much as is expected to register more than 10% growth. What has led to good set of numbers, or what could lead, is price hike and the volume growth, which is expected to lead to good set of operational performance numbers coming in from the company. Additionally, evacuation charges are also expected to aid the operating performance of the company. FSA volumes are seen rising on account of strong demand that we've seen from power sector. Key monitorables for this company will be e-auction volumes and realization, along with that outlook on coal prices. With that, let's toss it over to Samit for BPCL review.
So BPCL is expected to report a steady set of numbers in the fourth quarter of financial year 2018 on the back of refining margin expected to come in line with the Asian benchmark and the strong gross marketing margins. If you see the headline numbers, the revenue is expected to be higher by around 9% to close to 66,260 crore rupees in the fourth quarter, while net profit is expected to be flat at close to 2,155 crore rupees. EBITDA is expected to be higher by around 4%, while margins are expected to be stable at around 5%. Now, gross refining margin, that is the key number for the refinery is expected to come in at $7 per barrel versus $7.9 per barrel reported by the company in the last quarter. Now, the gross refining margin is coming off a bit compared to the last quarter, as the Singapore gross refining margin, that is the Asian benchmark, was also a tad lower in the fourth quarter to close to $7 per barrel. Now, if you see the gross marketing margin earned on sale of every liter of petrol and diesel, now that has expanded to close to 2.87 rupees and 2.93 rupees per liter in the fourth quarter of financial year 2018. Now, on the upside, refining margin could be better on the back of lack of any improvement in the Kochi refinery of the company, while on the downside, forex loss as against a forex gain in the last quarter, while digital discounts and GST will continue to weigh on the financials of the company in the fourth quarter of financial year 2018. On the operational side, if you see, the refinery throughput is expected to be high by around 2%. Now, this is because in the last quarter there was a planned shutdown which had impacted the refinery throughput, so it is expected to be high by 2% in the fourth quarter, while the sales is expected to be down by around 8% to close to 9.8 million metric tons in the fourth quarter of financial year 2018. Lastly, key things to watch out for would include inventory and the forex impact that the company sees in the fourth quarter, the GRM outlook given by the company, the Kochi refinery expansion plans, and lastly, any update on the Mozambique and the Brazil exploration blocks of the company. We also have Power Grid reporting its results today, and we have Jayesh with us to give us more details on the same.
Sumit, we are expecting steady top line and bottom line growth. While it could be operationally strong quarter for Power Grid, the numbers that we are working with, revenue is likely to grow 15% at 7,725 crores, while the EBITDA is likely to jump more than 20% at about 6,916 crores. We're expecting steady EBITDA margin expansion at about 89.5%, while the bottom line is expected to grow up nearly 18% at 2,258 crores. In terms of some of the other factors that we are watching out for is that the capitalization is expected to cross 9,250 crores, while segment revenue wise, transmission revenue is likely to grow 22%, consultancy revenue is likely to fall 10%, and the telecom revenue is likely to grow as much as 15%.
The Committee of Creditors for Binani Cement, led by Edelweiss ARC, have decided to back Ultratech Cement's 7,950 crore bid in the Binani Cement's insolvency case. Now, remember that under the same process, they had actually identified Dalmia Group as the preferred bidder when Dalmia Group had put in a bid for about 6,900 crore a few months ago. They had declined to listen to Ultratech's requests for revising the bid, stating that they had agreed they would only interact with the highest bidder for negotiations, and the second highest bidder would not be considered. Ultratech Cement then approached the NCLT trying to seek its approval in the matter, and the NCLT earlier this month passed an order where it said that bankers cannot deny Ultratech an opportunity to revise its bid, because the whole aim of the insolvency and bankruptcy process is that of value maximization, and keeping that in mind, Ultratech's revised bid has to be considered. Now, of course, the next step in this whole process is that the lenders will approach the NCLT with Ultratech's revised bid as the preferred bid in the matter, and the NCLT has to give its final nod. But also, Dalmia Group, which was earlier identified as the preferred bidder, will be going to the Supreme Court because they've already filed an appeal in the matter opposing this whole reconsideration of bid process. What the Supreme Court says in the matter will have a bearing on how lenders treat both these bidders in the Binani Cement insolvency case.
Well, on to some more stocks to watch based on delivery, buying and selling as of yesterday. The first stock that you have to keep on your radar, that would be Cadila Healthcare. Now remember that it ended about 3.5% lower and saw delivery selling of more than 70 crores. Now the delivery volume surged 166% at more than 20 lakh shares as compared to its 5-day average, and the total volume more than doubled at about 56 lakh shares as compared to its 5-day average. Second stock to watch out for, that would be Manappuram Finance. Now that was up about 3% in trade and saw delivery buying of more than 80 crores. The delivery volumes more than doubled at about 77 lakh shares as compared to its 5-day average, and the total volume also more than doubled at about 1.2 crore shares as compared to its 5-day average. Last and final stock to watch out for, now that would be Apollo Tyres. That too was up about 2.5% and saw delivery buying of more than 60 crores. The delivery volume surged 129% at 22 lakh shares as compared to its 5-day average, and the total volume surged about 108% at nearly 54 lakh shares as compared to its 5-day average.
All right, the big news from overnight came from Thoothukudi in Tamil Nadu, where only last week violent protests against a copper plant saw 13 people killed and several injured in police firing. Tamil Nadu government ordered the State Pollution Control Board to seal and permanently close the plant yesterday. Now, that plant, of course, belongs to the Vedanta Group. The government's decision comes a day ahead of the start of the assembly session, where it is likely to come under intense opposition over the Tuticorin incidents. Now, there's clearly lots to talk about over the course of the day, and you'll find all the live market action right here on Bloomberg Quint Live. There are also several stories on the website bloombergquint.com that you can consider reading. First up, rating agency ICRA has lowered credit ratings on Jet Airways' short-term and long-term loan facilities, citing weakened financial performance as the airline is unable to pass on increases in jet fuel prices to its customers. And compressed natural gas is now costlier in Delhi and its surrounding regions as Indraprastha gas increased prices to offset a weaker rupee and a rise in the proportion of higher-priced fuel. Remember, though, that crude prices have come off the highs of over $80 a barrel that they saw in recent weeks. All right, that's all you need to know going into trade today. Up next is Indian Open, and it'll take you through Market Open. Thanks so much for watching. This is Bloomberg Quint.